Saving money for retirement is an essential part of any financial planning, and there are various ways to invest money when it comes to your retirement goals. One option is, of course, to invest in stocks or ETFs. ETFs are one of my favorite because it allows you to invest in multiple different stocks, and if you're busy like myself, ETFs can help you diversify with a simple click of a button. Now, when it comes to ETFs, SCHD is one of the most popular, and for good reason. And in this video, we're going to dig deep and find out why a lot of investors are going all in on SCHD and how SCHD continuously outperforms the market. So first off, what is the SCHD ETF? SCHD is the Schwab US Dividend Equity ETF. It's an ETF that tracks the performance of the Dow Jones US Dividend 100 Index. The index comprises 100 high dividend paying stocks from US companies. SCHD ETF aims to provide investors with exposure to high-quality U.S. companies that have a history of paying stable dividends and also raising their dividends. But how does the SCHD fund work? SCHD is a passively managed ETF. It means that the fund's portfolio manager does not actively buy or sell securities in an attempt to beat the market, but instead, the fund's holdings are selected based on the index that it tracks. The index is comprised of 100 high dividend paying U.S. companies, and the fund holds a representative sample of these companies' stocks. The fund's holdings are reviewed and rebalanced quarterly to ensure that the portfolio remains aligned with the index. And the new holdings are going to be released in a few days by SCHD, is what I heard from Schwab, so be ready for that. And stay tuned to my channel because we will be going over these new holdings in detail. The fund's objective is to provide investors with exposure to companies that pay dividends, which is an important consideration for those who are investing for retirement. There's lots of different ways to get to retirement. A lot of people like to save, a lot of people like to invest in growth stocks and then slowly sell off their assets as they get older and older to help cover their bills and maybe travel the world. But what's cool about purchasing an ETF like SCHD is you don't even need to sell off your shares. If you started buying now and waited 20, 30, 40 years, you are likely going to be paid more in dividends by that point than you would even need. Dividend ETFs also tend to be more popular because they're less volatile in a lot of situations, providing investors with more stable income that you can track and that you can assume is coming in consistently. Additionally, companies that pay dividends are often more established and financially stable than those that don't pay dividends, making them sometimes a safer investment option. But more on why SCHD ETF is a great tool to use for retirement, and why I personally currently hold around $15,000 worth of SCHD, and I'm trying my best to buy a few shares every single trading day. Number one is the dividend income. One of my favorite parts of SCHD is the dividend income. Like I said, the starting yield right now is over 3.5%. One of the primary benefits of investing in SCHD is that the dividend income that it provides to its investors. As we previously mentioned, SCHD tracks the index of the 100 high dividend paying U.S. companies. The fund aims to provide investors with exposure to these companies, which can provide a reliable source of income and can definitely help and or cover all of the bills that we have when it's time to retire. When an investor owns shares of SCHD, they are entitled to receive a share of the dividend paid out by the company's fund's portfolio. With SCHD, the dividends are typically paid out quarterly, and the amount paid out per share is determined by the number of shares the investor owns, of course. Investors can use the dividend income received by SCHD to supplement their retirement income and or keep reinvesting into more SCHD, which then will continue to pay more dividends, and then reinvesting again would pay more dividends, and that's how the dividend snowball is created. Also, SCHD's diversification is my other favorite part of this dividend ETF. Diversification is the practice of spreading out your investments across different asset classes to reduce the risk of loss and also help you sleep better at night. Investing in a single stock altogether could be risky because if a company experiences financial difficulties and the stock price drops significantly, you are going to see massive losses in your overall portfolio. But when it comes to SCHD, unless there's a market-wide downturn like we kind of are seeing right now, you are not going to feel the pain as much because the company consists of 100 high dividend paying U.S. companies. And even if the value of the portfolio moves down, if you're holding onto a lot of SCHD, you are still going to be getting paid those dividends, unless of course every single company within SCHD cut their dividend, which is highly unlikely. The next thing I want to go through is type in all of my personal information on this dividend calculator. On this dividend calculator, I have the starting principal of around $15,000 because that's more or less how much SCHD I currently own at this time. And like I said to you guys earlier, I'm trying my best to find any buying power I can to buy a few shares of SCHD at least every single week. And hopefully throughout the year when I get paid or when different liquidity events happen, I'm going to personally be buying much more SCHD even more aggressively. So $15,000 is my starting capital with an annual dividend yield of around 3.6%, because that is SCHD's trailing 12 month. And also an expected annual dividend increase of 13.7%, which is another thing that I love about SCHD, is the fact that they've been raising their dividends extremely fast every single year. Now, what does this mean in simple terms? It means that if you hold a share of SCHD, you are going to be getting paid an annual payout amount on that given year. But over time, at least over the last 5 years, SCHD has been raising, giving the investor a massive increase, a raise if you will, every single year just for holding onto the share. So what's crazy is that your yield on cost is going to go up significantly, and we're going to see that here in a second. Also, DRIP is turned down because I'm reinvesting all of my SCHD dividends right back into more shares of SCHD. And currently I'm 30 years old, so I put 35 years of investing time, which means I'll be 65 years old by the end of this, which is a little bit past the retirement age, but you get the idea. So going through here on the dividend calculator, we can see that year one, we're at $15,000 of principal, and we're at $547 of annual dividends. By year number two, we've already almost doubled the annual dividend payouts to over $1,000 per year. Now also, what's important is look right here on yield on cost. 3.65% to 4% to 4.2 to 4.8. By year 5, we're already above 5% yield on cost, which is a pretty high yield, honestly. And what's also crazy is by year number 6, we're over $100,000 of principal into SCHD. It takes a little bit of time for the compounding effect to happen, but as you can see here on the graph, once this thing starts to go, it really starts to go. All the way to the point where after 35 years, my SCHD shares with a $15,000 initial balance will be over $16 million with over $600,000 of annual paid dividends. Now, as much as it pains me to have to wait 35 years for this to happen, even just after a matter of years, you are already going to see the snowball really take effect. And what's also awesome is that if you are able to, of course, add more annually, if you can get a side job, if you can try to earn more money, the snowball and the compounding is going to happen even faster. But with SCHD's 13% more or less expected annual dividend increase, even half that, even around 7 or 8%, you are going to see the compounding really take off, which is why, in my opinion, this ETF is one of the best ETFs in the entire stock market. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks again, and I'll see you in the next one.